Have you ever wondered why only 10% of traders succeed while the rest keep chasing luck? It's not about the strategy or the broker, it's all about the mindset, the structure, and the patience to truly understand the market. Today, you start your journey from beginner to pro, from confusion to clarity. Welcome to the Basic to Advanced Trading course. Let's talk about the foundation, understanding what trading really is. Trading isn't about guessing or just looking at red and green candles. It's about reading human behavior through price movements. Every candle reflects fear, greed, and emotion. The market is a mirror of people's psychology. When you learn to read that mirror, you stop reacting and start anticipating. Most beginners start off wrong, opening charts, adding indicators, and waiting for signals. They click buy or sell, winning sometimes but never really knowing why. A professional trader begins with understanding, not just trading. Let's simplify that foundation together. Every market, forex, crypto, or stocks, moves in three basic phases. First, the accumulation phase, where price builds energy. Next, the expansion phase, where that energy explodes in a clear direction. Finally, the distribution phase, where professionals take profits and retail traders enter too late. If you can recognize these three phases, you already know more than most traders ever will. Zoom out and look at the bigger picture. Is the market trending up, down, or moving sideways? This is called market structure, the skeleton of every chart. Price moves in waves. Higher highs and higher lows indicate an uptrend. Lower highs and lower lows indicate a downtrend. Equal highs and lows suggest a range or consolidation. You can't control the market, but you can learn to swim with the current, not against it. That's the first secret to consistency. Now, let's dive deeper into trading. Think of it as learning a new language, the language of candles. Each candle tells a unique story. A small body with a long wick, that's rejection. The market tried to move but didn't succeed. A large body with no wick? That's momentum. Buyers or sellers are in control. When you start seeing candles as voices, you'll hear what the market is saying. Next up, let's talk about support and resistance. These aren't just lines, they're zones where price reacts. The market respects memory. The more a level is touched, the stronger it becomes. Combine structure with candles for better insights. When price hits support and shows a bullish rejection in an uptrend, that's confirmation. That's logic, not luck. Indicators can assist, but they're not magic. Use them for confirmation, not direction. Two key indicators to know. EMA helps identify short-term momentum. RSI measures overbought and oversold levels. But remember, pros don't trade indicators. They trade confluence. Confluence means multiple factors lining up in the same direction. For example, an uptrend confirmed by structure, price at key support, a rejection candle, and RSI oversold. That's a high probability setup. Trading isn't about the number of trades you take. It's about waiting for the right setups. Patience isn't weakness. It's your greatest weapon.
Now that you understand structure and price action, let's build a solid trading approach. Professional traders follow a plan, a repeatable process that removes emotion from the equation. Step 1. Analyze the market context. What's the trend? What's the market phase? Identify your key zones. This sets the stage for your trades. Step 2. Wait for price to reach your area of interest. Don't chase candles. Let the price come to you. Patience is key. Step 3. Look for confirmation. This could be a rejection wick or an engulfing candle. Step 4. Manage your risk. Never risk more than 1 to 2% per trade. Remember, trading isn't about being right. It's about surviving long enough to stay in the game. Step 5. Define your target. Every trade needs an exit strategy. Whether it's a fixed risk-reward ratio or a trailing stop, know when to stop. Trading without a target? That's just gambling. Professional traders know The goal is not to trade more, it's to trade better. Now, let's peek behind the curtain at advanced concepts like smart money and liquidity. At this level, trading becomes a game of psychology and understanding market movements. Institutions, the smart money, move markets, not retail traders. They use liquidity, the orders of small traders, to fill their positions. Ever notice how price hits your stop loss and then reverses? That's not bad luck, it's liquidity engineering at play. To trade like a pro, start thinking like one. Ask yourself, where are retail traders buying? Where would their stop losses be? Those zones are where smart money usually hunts. Watch for fake breakouts near key levels. The real move often begins after the trap. The advanced trader doesn't chase moves, they wait for the trap to trigger. Then they enter in the real direction. Patience and observation are key. These skills separate amateurs from masters. Now we enter the most crucial part of this journey, your mind. Every trader faces two enemies, fear and greed. Fear of losing and greed for winning more. Fear pushes you to exit too early, while greed tempts you to enter too soon. Both can wipe out your account faster than any chart pattern ever could. Professional traders don't eliminate emotions, they control them with structure. Here's how. Journal every trade. Write your reason before entry, your feelings during, and your lessons after. Accept losses as feedback, not failure. Detach from outcomes. Focus on your process, not just profit. Remember this, you cannot control the market, only yourself. Master that truth, and your results will change forever. The market rewards discipline, not desire.
Becoming a professional trader isn't just a destination, it's a transformation. It's about shifting your identity from someone who wants to win to someone who deserves to win. You earn that through patience and understanding. Let's break down the journey together. At the basic level, you learned the foundations, price action, structure, and the logic behind every move. Then, at the intermediate level, you built your trading system, entries, exits, and risk management. Next, you advanced to see behind the curtain, smart money, liquidity, and market manipulation. But the real truth lies in psychology. Success isn't in the charts, it's in your mind. Now, let's talk about longevity. How do professionals stay consistent? They protect their capital and focus on percentages, not just dollars. They take breaks when emotions rise and keep learning because the market is always changing. Remember, setups evolve, but principles never die. Price moves in waves, driven by human emotion, and opportunity exists for those prepared. Final message. Trading isn't just about money, it's about freedom. It's the freedom to understand that chaos has rhythm and randomness has pattern. Even in the storm, there's order for those who can see it. You're not here to predict the future, you're here to react better than others when it arrives. Every loss is a lesson, every win is confirmation, and every mistake is a step closer to mastery. So when the next chart appears, remember this. The market tests you, not your strategy. You are the strategy, the risk manager, and your edge. This isn't the end of your journey, it's the beginning of your evolution. Welcome to the world of real trading. Stay patient, disciplined, and in control, because the market belongs to those who master themselves.